Hey everyone, February 15th today. Welcome to another video from investingsuccess.ca. Today I want to explore with you the subject of gold. And in particular, we're going to look at gold pricing by way of gold futures. We're going to look at the astrology of the gold futures, which started trading for the first time ever in 1974. And we're going to look then at how a person could potentially use astrology to pursue some trading in gold, either by way of the gold futures themselves or an ETF that has a group of mining companies in its portfolio, or by way of an ETF that holds a physical, secure supply of actual gold bullion. So we're going to look at all of those different approaches. So first of all, gold, what is it? Well, if you look on the periodic table, you will find that it is element number 79, and you will notice that it has a gram molecular weight of 196.97 grams per mole. What does that really mean? It's 10 times heavier than water. So if you've ever watched on the Discovery Channel or some of those other reality show channels on television, the stories about these guys who go off into the wilds of Alaska and they start trying to separate out gold mineralization in their sluice boxes and what have you. Really, what they're capitalizing on is the fact that gold is much heavier than water. So around the world, if you take a look at gold occurrences, gold ore, it really can be broken down, broadly speaking, into sulfide and non-sulfide type rock that contains the gold mineralization. So how do you get the gold out of the rock that you mine out of the ground? Well, you're going to crush it and you're going to grind it, no matter what the type of rock you're dealing with. You're going to crush and grind. You're going to take that finely ground rock, and in the case of rock that has a sulfur sulfide component, you're going to roast it or subject it to some high pressure leaching, and you're basically burning off any of the minerals like sulfur that you don't want. And then what's left you process further and smelt it down into gold bars. If you're dealing with non-sulfide ores, you're going to crush them, grind them very fine, and you're going to leach them with a poisonous solution then of sodium cyanide. And after you have exposed the ground up rock to the sodium cyanide, the gold is going to dissolve in that solution. You're then going to run that solution through some carbon filtration, and the gold will come out of solution thanks to the carbon filter media, and that's called the carbon in pulp process. So two basic ways of recovering the stuff. And if you're wondering then, how much is out there? How much have we ever recovered in the history of the world? Let's find out. According to the World Gold Council, in the history of mankind, it is estimated that all of the gold ever mined would fit into a big box, and that box would be 73 feet by 73 feet by 73 feet deep. That's it. The gold that has ever been mined is present perhaps on people's fingers as gold jewelry. It is present in the vaults of central banks in the form of gold bullion bars. It is present in circuit boards in the form of gold wire, but all of the stuff ever mined is out there. It's not like it rusts away and disappears, as would be the case of something like iron. Whatever has been mined, it's out there. And it's estimated that in the history of mankind, we have mined 208, call it 209,000 tons. That's it. And this is what makes gold then such a precious commodity, knowing that we really, in the history of mankind, have not extracted that much of it out of the earth. And there really is, at any given moment, not a lot of it that's freely available. And that's why it's trading at the price that it typically trades at. It is a scarce commodity. Now, gold futures themselves were invented, they started trading on December 31, 1974. And if you look at the horoscope wheel for December 31, 1974, you can see that the ascendant is at 6 degrees of Aquarius. The midheaven is at 27 degrees of Scorpio. You've got Mars, Neptune in the sign of Sagittarius. You've got Sun at 9 degrees of Capricorn. Mercury and Venus are also in Capricorn. So it becomes really quite intuitive then. What you're looking for are those times when celestial bodies such as the Moon, Sun, Mars, Mercury, Venus pass by features such as the natal midheaven, the natal ascendant, the natal Sun, natal Mars, natal Moon. And hopefully those will align then to swing highs and swing lows on a price chart of gold. And so to help you make those determinations, you are going to be using geocentric data. You can find that online. Maybe you've got a software program that helps you with that, or you can buy something like the New American Ephemeris for the 21st century. And with the 1974 first trade chart in hand, you can use your data and you can determine the dates, plus or minus a few days either side, when these transiting planets pass by the features in the 1974 first trade horoscope. So here's an example. This is gold futures, continuous front month chart. And if we go back to the left-hand side of the chart, in the latter part of January 2022, we had a swing low. And what caused that? Mars was passing the natal Sun in the 1974 natal horoscope. Venus was passing the natal Sun. Moon was passing the natal Sun. Sun was at the natal ascendant point. And all of these then conspired to trigger a change in human emotion, and people started buying gold and pushing the price up higher. Now, in March of 2022, the price of gold reached a fairly high point. It was just over $2,000 an ounce, but it couldn't hold. And it started to fade and give it all back. What triggered that? Well, Venus was at your natal ascendant. Mars was also at your natal ascendant. And Mars was at the same level of declination, that is, the same number of degrees above or below the horizon, as it was in 1974 on the day that the gold futures started trading. And that right there is something that W.D. Gand liked to focus on. When he was looking at commodity futures, he would determine the date that they first started trading, and he would determine the declination of the planets, most notably Venus and Mars, on that first trade date. He would then watch into the future for dates when Mars and Venus would pass by that same level of declination. And I see that quite often in my studies of price charts for individual stocks or commodities. There's something about the declination on the first trade date that tends to repeat itself, and it tends to quite often align with swing highs and swing lows on price. Now, price came down a little bit, recovered, tried to get back up over that $2,000 per ounce, could not do it. Why? Venus was passing natal Jupiter, Moon was passing natal Mars. Price eroded further, but it eventually found some support right at Moon being 90 degrees square to the natal Moon, and Moon being at the natal midheaven in that 1974 first trade horoscope. Price tried to recover in vain again, couldn't do it. Moon passing natal Mars triggered another fade, and down it went. Now you're getting down to $1,700 an ounce. Finds a little bit of support with Moon and Mars both being 90 degrees to natal Moon. Price rallies into August of 2002. You had Sun and the midheaven passing the natal Moon. Again, triggers an emotional response, and down we go again. So carrying on in our study, end of September 2022, we've got Moon at natal midheaven. We've got Moon 90 degrees square to the natal Moon, and that gives us a inflection swing low point. Price rises over the ensuing 6 days, but it could not push any higher. Moon passing the 1974 natal ascendant put the brakes on that rally, and down we come again. We eventually find some support in early November as Moon is passing natal Jupiter, and the price rallies. The rally stops at Moon passing natal Moon, and then we decline a little bit and we carry on. We eventually get to early February, just a couple weeks ago, and we had Sun passing the natal ascendant, and gold at that point was $1,950 an ounce. A lot of people were saying, here we go, we're going to get above 2,000. And the internet bloggers were out in full force, and they were determined it was going above 2,000. And as you can see by the chart, no, not so much. What triggered the turn down was you had Venus at natal Jupiter, Moon at natal Saturn, Moon at natal Moon. So that series of three cosmic events orchestrated a downturn. Now, I've looked ahead in time here, and I'm going to share with you 4 dates that you may want to mark on your calendar. April 1, Moon is going to be passing natal Moon. April 6, Moon is going to be 90 degrees square natal Moon, and Moon is also going to be passing the natal midheaven from the 1974 horoscope. April 16th, Moon at natal Jupiter, Mars at natal Saturn. And then there's one more in June 5th, and you've got 3 events that occur there. What excites me and also at the same time causes me concern is if you look back at some of my recent videos where I talked about heliocentric astrology and silver. I think you'll find that you've heard these dates before. And I talked in those previous videos about the heliocentric advances of the planet Venus, 137 degrees, 150 degrees, 209 degrees, 222 degrees. And I said in one of those videos that we had these April dates that were bearing down on us for silver. Here we've got the same dates for gold. I don't know what's happening in April. I hope nothing. But when I see 2 commodities, both indicating some significant swing points in the month of April, I get a little bit worried. And some of my other work that I've done on cyclicality shows that there is something also coming at us in April. So whether it's the war in Ukraine or something more bizarre, I don't know. I hope nothing. But I'm just a little on edge when I see these April events on gold and on silver. Now, as I have alluded to in one prior video, I like to overlay or add to my charts a slow stochastic and a derivative oscillator. Now, on the Optima program, I only have access to the derivative oscillator. If you're lucky on the software that you might be using, if you find something called the ergodic oscillator, it is similar to the derivative oscillator, but I think it's just a little bit more powerful. If you have neither, look for something called the percent price oscillator. So I basically take a stochastic and an oscillator and my cosmic events, and what I'm looking for then are opportunities where I get a buy signal on the chart technicals that aligns with the cosmic events on the chart. So I use my 1974 first trade chart. I use my geocentric data. I start to make notes then of when to expect some of these twists and turns. And with those dates in hand, then I can start to study the chart in more detail. Oh, and by the way, the declination of Venus and Mars in November of this year, both will, during the month of November, pass by their same level of declination that they were at in 1974. So look for something in the month of November to happen in the realm of gold. Okay, so if a person was trading gold futures, I'm going to take you to July of 2022. You've got your cosmic event, and it was Moon and Mars being 90 degrees square to the natal moon. You've got your histogram bars on your derivative oscillator turning positive, getting above the zero line. You've got your slow stochastic having crossed over and given you a positive indication. So two technical chart indicators and a pair of cosmic events. Would you have bought gold there? Yeah, you would have. When do you get out of the trade? Well, here in the middle of August, you've got a cosmic event, actually two of them. And very shortly thereafter, your slow stochastic curls over and it falls below the upper boundary line. Your histogram bars go below the zero line. That is your indication to get out. Have you made any money on the trade? Yeah, you get in around 1660 and you're out at 1750, so you've made something. And look what happens next. Your histogram bars basically stay, for the most part, unfavorable then for quite a while, and so too does your slow stochastic. You get another cosmic event, this one Moon passing natal ascendant in late September. You get a positive confirmation on the stochastic. Your histogram bars turn positive. So yes, you could have bought it there. When would you have gotten out of it? Well, you would have gotten out when the stochastic curls over and falls beneath the upper boundary line. Now, moving on and looking at the remainder of our chart here. In November 2022, you would have gotten in at using the chart technicals, and don't forget you had a cosmic event, Moon at natal Jupiter. And look at what price does. It takes a run up and it takes a look at that 200-day moving average and it gets afraid. And it says, I don't have the ability right now to get above that 200-day moving average, and it starts to retreat. Well, you've got your stochastic telling you, hey, time to get out of the way. And you've got your histogram bars on the oscillator saying, hey, time to get out of the way. And so you get out of the way. Now, the price of gold thereafter continues to rise, but you're not getting the actual buy signals on the stochastic. Your derivative oscillator bars are pretty tepid. They're above a little bit, they're below a little bit. So unfortunately, the technicals would have kept you out of any gold trades. What would you have lost? Well, the answer is not a hell of a lot. Maybe $20 or $30 an ounce. And so sometimes it's wise to just heed the technical indicators, especially when there's nothing in the way of cosmic events. Now, when do you get back in the trade? Well, in January, you've got your stochastic getting above the upper boundary line, and you've got your histogram bars now turning positive. So yes, you would have got back in the trade in January, but it would have been a short one. You're out the last week of January, Sun passing natal ascendant, stochastic going below the upper boundary line, oscillator bars falling below the zero line. And it's probably a good thing that you got out. Now, don't kick yourself because, after you got out, it posted a couple days of really strong performance. But then you had 3 cosmic events. Your technical indicators at those events were already negative. So really the chart is telling you you haven't missed out on much. And since then, the price of gold has continued to weaken. And so that's the technique that I use on any of the stocks that I talk about, write about, and follow. Now we're going to take a look at something a little different here. These are gold futures. Futures trading demands that you post a margin. And the amount of margin to undertake a gold futures trade is pretty substantial. And so I don't trade the gold futures myself. I use the gold futures charts to keep an eye on the swing points. But then if I'm going to trade gold, I will do it by way of an ETF. So let's take a look at a couple examples then of ETFs. All right, this is the one that I typically will trade. It's managed by BlackRock. It trades in Canada on the Toronto Stock Exchange. The ticker symbol is XGD. XGD is basically a basket of large gold mining companies. Some of them could be located with projects in South America. Some of them might have projects in Nevada. Some of them might have projects in Greece, in Turkey, in various parts of the world. Now, what I'm finding is the ETF will behave just a little bit differently than the actual gold futures. Why is that? Because a gold mining stock faces different amounts of, let's say, royalties that it has to pay in different jurisdictions around the world. Depending on where it is and what geology it's mining the gold out of, different gold mining companies might face different profit margins. All of them will be profitable, some more so than others. And so that's why what I'm seeing when I use an ETF is if I see an indication on the gold futures that I should be buying, a lot of times I will get a similar buy signal on the ETF, and it will come either a few days just ahead of the buy signal on the gold futures or a few days later. So you just have to get accustomed then to not having the buy signal occur exactly on the same day as on the gold futures. And if you can get comfortable with that, yes, you can use these ETFs. Now I'm going to show you one more. This one is also managed by BlackRock. The The ticker symbol on the Toronto Stock Exchange is CGL. And this ETF is made up of a physical inventory of gold bullion bars that are in safe, secure storage in a vault. And it too will respond slightly differently than the physical gold futures, although it's not too far off. And by using this one, you're actually avoiding any of the geopolitics of a gold mining company trying to operate in Chile or Argentina or some foreign country in Eastern Europe. You are dealing strictly with the physical gold bars. If I had to choose between this one and the one that is a basket of gold mining stocks, I'm tending to lean more to this one here. And I'll give you an example. This morning it was announced that I think it was Newmont Mining has made a serious overture to take over Australian mining company Newcrest. Well, the markets apparently didn't like it, and they are punishing the shares of Newmont Mining. Well, Newmont Mining is actually part and parcel of the XGD ETF. So there's an example where that inventory or that collection of mining shares can suffer some weird occurrences through no fault of astrology or anything else. It could just be how the markets perceive a proposed merger of two companies. So I prefer, going forward, I think I'm going to stick to the BlackRock ETF that actually holds the physical inventory of gold bullion bars. So again, I'm looking for the cosmic occurrence. I'm looking for the stochastic to get above the upper boundary line, or at least give me a favorable crossover. And I'm looking then for a favorable histogram bar on the oscillator. I want those bars to get above 0. And if all of those come into alignment, yes, then I've generally got an entry point. And if I see a cosmic event, and if I see the stochastic cross back underneath the upper bound, and if I see the histogram bars turn negative, that's my sign to get out of the way. And so to conclude, as I do with most of these short videos, don't forget the Financial Astrology Almanac 2023 version is out there. It's available on Amazon if Amazon is your thing. If you don't like physical books on your desk, it's available in ebook format. If you want to support your local bricks and mortar bookstore, go and talk to the nice people at your local bookstore. They'll order it in for you. They'll be sourcing it from a publisher in the US called Ingram. Take a look at my website, investingsuccess.ca. I've got a series of letters that I prepare for subscribers. Astrology letter, cycles report, resource trader, mobility report. If you're fairly new to using cosmic events to interpret the marketplace, if you go to a platform called udemy.com, I've got a course on there that I use to introduce people to the concept of financial astrology, and I will be putting on more courses on Udemy in the not too distant future. So thank you very much for taking time to listen to me natter on about gold. Do take a look at it, and just remember, all of the gold that we've ever mined would fit in a nice box in your front yard, and it is really a precious commodity, and that is why it commands the price that it does. Will it ultimately explode to $10,000 an ounce, as the internet bloggers are saying? Maybe, but even if it doesn't, you can use astrology and chart technical analysis to play the ups and the downs, the swing highs and the swing lows. Have a great day. We will talk very soon. Thanks.